and we'll just get started. Okay, so thank you everyone for coming to our event. This is a series of events that we like to do for InvestaCrowd and ICTX. We literally had less than a week to put this together because Angie Lau is here, our esteemed honored guest, who is ex-Bloomberg anchor, award-winning journalist, but I'll let her introduce herself later. I usually do the moderating for our events, but we have a much more professional moderator here today, so I'll give up the stage. And I really want to just thank everyone for being here and thank our sponsors, in particular our venue sponsor. Here, we're in District 6. It's a co-working space that is very specifically focused on prop tech and the real estate space. I don't know if any of you have heard of Propel, which is an accelerator program in collaboration with JLL. And District 6 is the proud sponsor or partner of that program. And Julian, coincidentally, the co-founder of InvestaCrowd, is also a mentor for that program. I do believe they have some more availability in terms of spaces. They have private offices and also hot desks. If anyone has any questions, please contact Jethro. And we're very, very happy and very thankful to have you guys as our venue sponsors. Thank you. Okay, so I'm just going to start off with a short presentation on security tokens. That's what we're here to talk about. And so a little bit of history about InvestaCrowd. We're actually an existing company. We have a capital markets license from the MES here to deal in securities. Since inception, we've raised funding for about, this is slightly old, we've raised funding for about 26 projects, and we've exited 13 projects. And what we do is a prop tech company, or for lack of better terminology, a real estate crowdfunding platform that focuses on commercial real estate in developed markets. So we will provide funding across the entire capital stack. We usually get allocations of a particular funding requirement from commercial real estate developers, and it spans across the entire capital stack. And we've managed to get investors in for as little as $25,000. That's not to say that we don't work with, our license allows us to deal with accredited investors and up. So we do have family offices and high net worth individuals we work with who can fund the entire allocation. But where we're moving towards now is entirely blockchain focused. We're looking at blockchain companies, blockchain investments, and launching security tokens on our InvestaCrowd platform. And also building out the ICTX exchange, which will provide the secondary trading of these tokenized assets. So we're here to talk about security tokens, but before I go there, I just want to have a general disclaimer. None of what we say here is investment or legal advice. So how many of you have actually heard of security token offerings? Okay, that's a very, very large percentage of the group. I didn't expect that. So we've all heard about ICOs, and a lot of people think security tokens will be the next wave in the crypto market. Usually you can divide tokens into 3 categories. You have payment tokens, which are pretty self-explanatory, utility tokens, which you buy, in exchange for a service or a product on a platform. And then security tokens, they are a little bit of a mess because, as we'll see later, the definition is not uniform, and there's not a uniform way of testing or defining what is a security token. So in Singapore, Singapore is an exception, I would say. Singapore has clearly said, the MAS has said that any capital markets products will be governed by the Securities and Future Act. And under the Securities and Future Act, securities include any debentures, stocks, shares, any right, option, or derivative of any of the above, any hedging instrument, collective investment schemes, and derivatives of such interests. So that's a pretty clear definition. Now the US is a different animal because it's quite broad, and it includes investments in fractional undivided interest in oil, gas, mineral rights, etc. So they have this test called the Howey test, right? And that's a four-pronged test that says, have you invested money into a common enterprise with an expectation of profit based on the efforts of others? And that's to help you determine when an offering is or is not a security. And that's why the SEC has basically declared that most ICOs are securities because of that broad definition. And so in the US, you're seeing this shift from utility tokens to security token offerings. But I think, even in the rest of the world where we don't have such a broad definition, people are still moving to security token offerings, and probably because it offers more investor protection and because there's just no appetite for ICOs. And to be frank, a lot of these offerings were probably securities to begin with, disguised as utility offerings. Why are securities laws there? Well, I think it's really for a public policy concern, the principal agent problem, where you're entrusting some third party to invest money on your behalf, right? And so securities laws are there to make sure there's orderly trading on the secondary market, some accountability, and adequate disclosures. So I did want to point out some key concerns with security token offerings. A lot of people do not really understand the implications behind a security token offering and whether it's a good fit for their business as a fundraising mechanism. Because yes, any company can issue a security token, but the offering is subject to securities regulations. How you publicly solicit that funding is highly regulated. And typically a prospectus which costs a lot of money and which has a lot of regulatory requirements in terms of disclosure is required. So a lot of people try to offer these securities under these exemptions that exist. And some of the common exemptions are private placements, small offerings in Singapore, and accredited investor offerings. Now, it still means, though, that you don't have a public solicitation, there's still a public solicitation requirement, right? So most primary issuances have to be done on regulated platforms. So InvestorCrowd actually has a CMS license to deal in securities and to do the primary issuance. And InvestorCrowd is actually working on getting its market operator license here in Singapore. Now you realize in Singapore, whether you plan on listing or trading securities tokens, you will require some kind of license. If you want to trade, you will require both a CMS license and an RMO license, whether under the existing RMO regime or under the proposed new tiered system. If anyone has read the 3-tiered system, first tier allows you to deal with accredited investors, second tier is the current tier, third tier allows you to, sorry, I got that mixed up. Third tier allows you to deal with accredited investors, second tier allows you to deal under the current regime, and first tier allows you to deal with some limited exposure to retail investors. No matter what, though, under that regime, you still have to work with a licensed broker-dealer. And I think just the last point that I wanted to point out about tokenization is that tokenization of a bad investment doesn't make the investment better. And tokenization of something that is not a security will not make it a security. So if you have a piece of art like Van Gogh, for example, and you tokenize that, you have many, many owners of that piece of art, that underlying product itself is not a security, and there's intrinsic value, implicit value in that product, and the value goes up and down based on supply and demand. I would argue that that is not a security. So from that, I will hand the mic over to my co-founder, Julian.
So welcome, everybody. I'm only going to roll through this pretty quickly because I want you all to hear from a panel of experts. Chad, Thomas, they're working on the project already. Enhui, we've met recently and we're discussing a few different ideas. And Angie, we connected recently, and I guess I'll let you also tell everyone why you're here tonight. But I personally love ICOs, the good ones. I love the structure. When we saw it came out, I said this is a fantastic, fascinating use of technology. And then you can just question what it's for. Recently, there's been a huge surge and a big movement across into the security token world. There's a lot of people on my team here who've been working on our projects for over 18 months. We've been talking about this for 18 months. Most people over in Asia have been talking about it for about 18 days, but it's great. It's all coming this way. There are 7 Investor Crowd shirts. They carry the good fortune. So whoever asks the best 7 questions and has signed up on the platform, Angie will be giving you a t-shirt. So I'll just try and get through a few slides quickly just to lay the groundwork for what's going to happen next. And this is from Polymath, one of the leading companies in Canada, actually, working on tokenizing assets. It's actually a platform offering a service. The technology is a service for any project to be able to tokenize their security. What they mean here is $700 billion of utility tokens, $100 billion of security tokens. Let's move to 2018, and then a little bit down the line, we've surged to this huge volume. Why is it such a huge volume? Because all we see when we see security tokens is a better shareholding structure, a digital share versus paper. There's a lot that can be done from that, but that's how simple it is. But what's needed, because it's a security, is teams of experts and the right types of companies and all the good things that you would normally assess and consider to make that investment in the first place. With the token overlay, it becomes a lot more interesting. But if we wouldn't invest in the project pre-token, then we're probably not going to do it now. So what are some of the key benefits? It's going to be faster, it's going to be cheaper, and most importantly, I think that the key is that private securities will be tradable. Now you have to go on licensed platforms, etc. This is very different from cryptocurrencies, but there's just an enormous amount of tied up capital. Even from our own experience, I've been involved in probably 32 real estate deals in the last couple of years. Obviously a lot for Investor Crowd. Every single deal has investors that would like to sell out, not because necessarily there's anything wrong with the deal, but because their lives have changed or they want to do something else. But there's no facility for that. So that's when we got super excited about this whole space a year and a half, 2 years ago, and went, well, what if we could build this into our model and our business, or solve real problems or real investments? We got laughed out of a lot of the blockchain conferences at the beginning, but now it's 90% of the conversation at the conference. So if we started in real estate, actually, our license is to deal in any security. We're expanding into private equity and venture capital. There's a few reasons for that, but as if we just focus on real estate as an example, a really low-hanging fruit are real estate funds. So if you've got a high-quality fund that typically had a 7 to 10-year term, you now have an ability to raise money for that fund, and those investors aren't tied up. Whoever starts doing this first is going to get all the money if they're lined up against 10 other funds that aren't doing this, if all things else are equal. So we've been trying to tell our venture partners, our venture capital partners, to look at this because I think it would differentiate them. Because that liquidity element is missing from all the other funds. So if we also look at a building, now this isn't going to work for all real estate, but if we were to, as an example, a $100 million building, there's no debt on it. It's $100 million. The owner would tokenize a minority stake. We believe as a business, there's no use doing any tokens for any projects if it's going to be less interesting than a public stock. So when we think about real estate, we think if you can get liquidity and a 6% return on the SGX, then probably not worth doing a token if it's anything less than that. The interesting thing about private equity is every deal we do is multiple times those returns. So we're looking at public market liquidity with private market returns. But back to this, you tokenize minority stakes. So the reason and all the deals we've ever done in our business, there's always a licensed professional company running the project who's in charge. You're not going to tokenize any asset that's worth anything if the owners aren't in control and 5,000 new owners get to decide. So it's minority stakes. That's what it's going to be with our platforms. So this is where it gets interesting. You then create some liquidity for an owner, but they're still in control. Investors then get to come into $100 million assets, obviously with a lot less funding. And what's really exciting about that is that this is perfect for Singapore and Hong Kong. And we haven't done any deals in those markets because there's too much capital and not enough projects. So although the security token concept is digital shares, so we're taking a lot of the DNA of ICOs and blockchain, there are many, many differences, but there's going to be some huge advantages. One of the interesting parts about it is you need platforms and infrastructure to get the whole industry going. We fundamentally believe in the future every single security offering will be a security token offering. And why is that? Because it's just a better way of doing it. There's already 6 or 7 jurisdictions in the world that issue investment vehicles: Delaware, Wyoming, Isle of Man, Jersey. You can go and get a tokenized investment company set up today. So we're just plugging in what exists, and this will grow over time with different jurisdictions. So it's available now, but what's important also is that I think Coinbase is the only cryptocurrency exchange that has a license to deal in securities. A lot of others are trying, a lot of them will fail, but you'll need to be trading these things on licensed platforms for now. Even if a decentralized version is possible technically, it's going to take some time for the legal side of that to iron out. So on the top of our business, we will be offering primary issuance of launching security token offerings where you raise money, and then we're building the ICTX exchange where you can trade them. So they're the two key infrastructure plays. So if anyone in the space has kind of looked at it, America has been thinking about this for 12 months, maybe a bit longer, because the SEC has been saying most ICOs are actually security tokens. So there's a whole bunch of good platforms and companies moving ahead from the primary issuance to the secondary trading, and we're building that system out for Asia. So I'm going to, there's a lot of great people on the project, but I want to get into the panel. So first, I'd like to introduce Angie. We connected a couple months ago, started just jamming about everything related, started talking about how crap the media in blockchain and crypto was and how something needed to be done. And you said, I'm going to do something about it. So I was like, that's great, we need this. So I want to hand it over to you, so then you can also introduce the other panels. And we're hoping that that everyone here learns a lot. This is when Alice says 101, it's like we are the forefront of doing this. These key platforms in the US are just trying to launch their first one and then have $50 million in the bank and be working on it for a year. So this is right at the forefront. So we'd love all to welcome the input, and we're looking at all the 13 STO projects now, assessing them. But we want to see some lively debate and some great questions from the crowd. So I'll hand it over to Angie.
Julian, thank you. All right, as our panelists, come on down. You are the next contestant on The Price is Right. The Price is not right now, but it will be right. So thank you, Julian, and thank you, Alice, and thank you to the entire team for putting together something so quick. It was really a conversation that we started a couple of months ago, and I'm new to this space. I come to this space as an agnostic, as somebody who believes in the blockchain technology, and who believes as a journalist that the industry and the potential of the industry is not being well served by journalism, and certainly not being served by the industry itself. Right now, the kind of conversations that exist on social media or YouTube or wherever it is, including mainstream media, most of it, I don't want to blame all of it, because there are some incredible journalists in this space. Right now, it is really just very superficial, or somebody's trying to sell you something. And it has done an incredible disservice to the technology that can change the world. So when people say ICOs, what do you think of immediately? Right, scams, I heard that. And then Bitcoin. When I say blockchain, what do you think of? Oh, went from 20 to 4 to 100, somebody said the other day. That's not the kind of coverage that we need. So I'm very excited to confidentially tell you that in 2 weeks' time, I'm going to be launching, along with partners, with the editorial gravitas of people like Julian and everybody else, though I'm not working directly with Julian. But the partners that I have are OGs, they are coders, they are developers, they are legal, they're regulators. They're in this space, they're reading the white papers, they're reading the code, and they're kicking the tires. Due diligence. Who can afford due diligence in mainstream media? Nobody. So these are the collaborators because we realize the responsibility that we have to the industry. It's called Forkast.news, and I can't wait to tell you all about it. Okay, so I'm going to sit down.
Because part of my role tonight is really to kick the tires on everything, including this conversation. Why should STOs even exist? Is this another marketing tool to get you away from ICOs and that stink of ICOs and convince an entire crowd of new investors who are still interested in the space to buy in? Is it that? Or could this be the vehicle in which the regulatory participants are here, the adults come into the room and make everybody feel like, you know what? Somebody is watching this space and I can feel safe participating in the kind of projects that Julian is talking about. So I'm here to kick the tires on our panelists, our conversation, and myself. And so really I'm here to service you. All of our panelists tonight are in service to you. So I want to thank everyone for being here tonight. Julian for putting together something literally within 24 hours and it sold out. Within a couple of hours, we were maxed out and it was an incredible feat. Like, this is how fast this industry works. All right. So let me introduce you to our panelists right now. Anhui Ong is currently the head of business development at Zilliqa, previously from the fin services sector, so you had a Bloomberg terminal, so I probably saw you on the Bloomberg terminal, right? Starting off her career at BlackRock, where she worked in intermediary sales of BlackRock funds and iShares ETFs, and then also JP Morgan Asset Management. But let me tell you a little bit about Zilliqa. It says it is a next-generation high-throughput blockchain from Singapore, 2,800 transactions per second compared to popular blockchains, about 5 to 20 transactions. Okay, I'm going to ask you how you did that, all right? Julian Kwan, InvestaCrowd CEO and our host, as you know, spent his life starting businesses in new markets, new industries, ranging from social media to real estate, in which we find him and his partner Alice in this space. It's an investment platform, as you heard, that holds capital market services license from MAS. We have Chad Lynch, head of crypto security, Horangi Cyber Security. A little thing called cybersecurity, something you should think about these days. Chad is a software engineer, cybersecurity consultant that specializes in crypto. It's a little bit ironic that we are in such an incredibly technologically backed industry, and yet Mt. Gox happens, right? And it continues to happen. So you Chad first got into trading Bitcoin algorithmically during that Mt. Gox hack, so I'm sure it has informed your career since. Horangi Cybersecurity based in Singapore. And then last but not least, we have Thomas McMahon, Director and CEO of PACE. PACE is Pan Asia Clearing Enterprise. So what is that? Well, Thomas has spent the past 30 years in commodity trading on Wall Street and then in Asia. Over the past 15 years has helped been part of 3 exchange launches in Dubai, Hong Kong, and Singapore. And what PACE does is encourage the development of Pan-Asian OTC physical derivative futures product-based platforms. I think most important and most interesting, at least for me, is making that value transition as the regional regulatory regimes move towards implementation of broader-based global regulatory structures like Basel III, G20, EU, EMIR, UK, And who is everybody here tonight? Can you just tell me how many of you are just kind of like flies on the wall on blockchain, crypto, not necessarily in the industry, but you're interested and that's why you're here? Hands up. Everybody is in crypto. Everybody is in blockchain. Okay. All right, so we're talking to a very well-versed crowd, probably more well-versed than me. All right, so here we go. To our panelists. What is the difference between STO and ICO? Is this just a marketing ploy?
Hello? Okay. Well, I'm going to start out. I've been in crypto for a long time, so I started out when there was no such thing as raising money. It was primarily a collection of like software developers, engineers in forums discussing how they could solve very unique problems. But a lot of those problems turned out to be very transferable when we think about the issues related to smart contracts. So I guess when I'm thinking about a security token, I always come from the coding or the engineering side and say it's not necessarily a security in terms of a financial asset. It's the right to have some code executed. So when you think about it in those terms, the actual definition expands quite drastically, where if we're going to regulate or think about the STOs as a security, we have to think about it the right to execute some code function. So it doesn't necessarily mean that there's an asset underlying that you have any right to. It means you have a purely digital execution call that you have the right to execute. So I think there's that side of the equation, but I'm sure the other guys can bring more of a kind of a financial take on it. But I always think of it as the right to execute something in a distributed application. So
maybe I'll add on to that. So I think for utility tokens, this was a very new concept that came about as a result of the ICO model. And for us, it was really awesome because it was like, oh, hey, look, I can raise money, but at the same time, I give up no equity as well. And what we've actually seen in this bear market is that you're actually in a situation where you actually see some startups, they actually have more money in the bank than their market cap of their tokens. And so what this means is that if you, as a utility token holder, you think that, oh, but that's not right because well, the book value is actually higher than the market cap, which means like you should be buying those things. But the actual fact is that as a utility token holder, you actually have no rights over the startup. So I think what we're kind of seeing is that for utility tokens, I think there are some blockchains out there with real utility, say case in point Ethereum, where you actually can do something with the ether, but the majority of projects out there, it's kind of hard to kind of define what sort of utility you're actually getting out of it. And I think it's kind of the market starting to realize that, hey, like actually when I invest in something, I don't just want to invest in something that's kind of like a little harder to define like utility, but equity is something that I think people actually understand as a very well-defined concept. And also, it's not just about startups raising money, but potentially the exciting thing about security tokens is that you can have actually real assets that actually back these things. So, it could be, let's say you're trying to tokenize a factory, or, you actually have like accounts receivable that you actually want to tokenize. So there are going to be actual things, with cash flows that you can actually model. And these will actually give value to the token. So, I would say, yes, it's a bit of sort of the market is also maturing. The market is also sort of waking up to, the fact that, perhaps not a lot of these things actually have utility, but, having like assets actually backing it, or, giving up equity, that's a concept that people are a lot more comfortable with. And I think you start to see like, emergence of different sorts of companies, not just startups, but also like asset owners and traditional companies try and look at this model of trying to raise capital via the security token model.
Thomas, from a regulatory point of view, how should STOs be viewed?
Yeah, thanks. when I it was back in 2013-14 when I first got a look at the Bitcoin side of what we're looking at, and Ether was still a vision, and it was just coming to the forefront. So I mean, Ether is the backside of what we know as ICOs today and STOs. I mean, so my vision always was that they weren't separate. It was just a means to an end. So the ICO was like the pre-IPO. It was the money, it was the seed capital, but it was the means to an end was always going to be when I first started to write down my ideas, and there's a couple of people in the room that I shared this with years back. I always believed that there would be asset-backed tokens. I didn't call them STOs. That acronym has come recently, but I always believed that there would be a fundamental underlying asset, whether it was a security or a bond or an interest rate or a dividend or a fractional ownership in real estate. And actually, real estate was one of the things I first wrote down. But I come out of the commodities world where there's a lot of fraud. And if you look at the exchanges today, other than an equities exchange, the issuance of defining documentation for ownership is still a very murky and blurry world, proprietary. Each exchange does it differently. There's no unified standards. There's been some standardization around equities because of like the DTCC and the US and things. But still, I mean, you're from Hong Kong. Hong Kong does it differently than Singapore for the DTP and things. So there's still a lot of question marks around ownership. I always saw the standardization model around what we now are calling STOs as just that. It standardized the process. The chain unified the processes. The smart contracts on the back end of it would standardize the use cases, and that it would become a very fair playing field. The regulators then went, it's way too disruptive, and that's where it gets to the regulatory standpoint. There are no standards of recording of ownership outside of regulated brokerages. So if you're in Hong Kong with the SFC, or if you're with MAS, you're up against SGX or the SEC or the CFTC or the FCA, NETI, MAF, MOF. I mean, there's a gazillion of them. Everyone looks sort of the same, but if you look at their tax and their ownership and rights and everything, they're all very different. So the regulators looked at this thing that actually looks too simple, believe it or not. When you talk to them and you go, this is probably the cleanest record-keeping model you'll ever get in your life. It actually satisfies an immense amount of the post-Lehman demand for data collection, aggregation, and definition, even on a daily basis. Real-time auditing. I mean, it's amazing how efficient, right? These are things, but everybody's like, wait a minute, you're going to disrupt the brokerage industry, the banking industry. And me as a regulator, I don't want to have a job tomorrow because it's going to become way too efficient. It's fear factor more than reality. I think we're at a point, sort of that progressive chart that they had up before, a year on from where we were in 17 with all the noise around Ether and ICOs to a year on where you've got major entities adopting even digital national currencies are now being test beds. I mean, you guys were part of that, the Project Ubin. You're looking at M1 in major central banks that have already test bedded, and IMF, World Bank is one of them. FedCoin was just announced by Goldman Sachs 2 days ago. Trust me, Goldman Sachs could not have announced that if they hadn't gotten the U.S. Treasury to say, yeah, you can do an M1 FedCoin. That's the reality where we're going forward. So the fear of adoption is greater than the actual adoption. It's like anything else. Change is the scariest thing. Once you change and adopt, people realize the value of going forward. And I think we're really at that push of transition. We've gotten the buzz of the $20,000 Bitcoin or the $1,000 ERC20 token is gone. So it's not the bloom off the rose. It's a reset to an actually valid systemic shift. And we're seeing that systemic shift adopted by mainstream industries, whether it's just for ID, like in Zug in Switzerland. They've now, the entire canton of Zug have adopted digital health, IDs, digital passports, and they basically, individuals can carry all their ID and at the government level and pass through borders. So now the rest of Switzerland is going, hey, that's a really good idea, maybe we should do it nationally. You've got projects here that are being explored by MAS that they will be adopted in time at a government level as much as individual business levels. So it's a slow transition region by region.
Okay, let me ask the audience this. Who would buy an ICO today? Who would buy an STO today? Why? And I think the why is possibly, I guess, the asset. Access to the asset, direct linkage to the access, right? Now, we heard from Alice her opinion on what an asset actually is. It was a very interesting example. I would have actually called it an asset. She doesn't think it's an asset. Who is going to call what an asset? Who is the body? Is it the community? Or is it the industry? Or is it a regulatory body that says, this is an asset, this is not an asset? Who's going to say that?
I just want to ask a question. Who here owns shares, equities? Right? Do you have any idea where they are? Yeah, exactly. It's somewhere, and you've got a trust factor on where it is. Okay. Anybody opened a bank account recently at DBS? I'm sure a few people have. Or you've been pinged on the new digital banking system at DBS or Paylon, right? Do you have any idea where your money is? You've got implicit trust that it's somewhere. It's sitting in a digital platform, but it's in a proprietary platform. It's not in a standardized platform. And the point is, those are both disruptible. Banking is disruptible and equities are disruptible. And we understand those assets. We understand our own money. We understand the share of stocks, say Temple Steel or IBM. Who here owns a property? Pretty much everybody, right? Or you got a lease on a property, right? Okay, so that's got an income stream to the defined owner. The guys who own the property, do you have an idea where your property documents are? Maybe, right? You probably got a box in your house. A safe deposit box? Maybe not. Right? You can define that in digital structures. Again, a disruptible industry. It's geometric what can be changed in what we're doing here. Those are all assets. We understand cash as an asset. We understand share of stock, even though it's electronic. And it's been electronic for a long time. First electronic shares were created in 1989 on the Tokyo Stock Exchange. And no one has ever questioned that the share is electronic. But we're sitting here going, wow, electronic digital asset? We're already in that age. We're changing the metric and the acceptance. We've already accepted it, right? You have PayWave, right? I'm sure anybody who lives in Singapore has already gotten into a case where you actually don't carry cash. Even though people are fearful of being cashless, we're already cashless. It's really a lazy man's way of spending your own money. Right? It's not debit. Well, it is debit because it's your own money. It's not credit, I should say. But we accept credit. Right? A credit card's been in the system since 1949. Citibank and Diners Club. We didn't think anything of spending money that actually wasn't ours. Right? It was electronic money. We've already adopted the practices of a system that we're moving forward that we're discussing tonight.
Julian, you're looking at this space and you're transitioning for the investor.
right? How do you make sure that that relationship is preserved in the way that is responsible from a business owner point of view and from investors in your platform?
Yeah, I think a few ideas to share. I think Chad and I were just chatting about this yesterday on the actual issuance side of things. First, any of these projects that come must be passing due diligence with or without a token. So you now have a double layer of due diligence required. So normal deal flow is this financials work, and now how am I going to get this token? Is it secure, and what happens if I lose it? Sort of wrapped into that, we're now starting to see there's two different types. So we're just at the first terminology of security tokens. That should almost be broken into two. The security tokens that are the revenue shares, the options, the derivatives, and then the asset-backed equity tokens. If that's too confusing to put on slides. So we're already looking at a couple of different ways it's going. So that becomes quite interesting. So from us, coming from our background and thinking about only wanting to do deals that make sense, and I've got this 2-hour screen saver that it keeps picking up on me. Sorry. So so we're looking at this saying, well, what are the right types of things to look at? We know what asset and equity-backed tokens look like because we want to make sure that we protect the investors and that things go well and they come back again. What's an interesting challenge for our team right now is looking at these hybrids and security versions. And back to your question of, is it a security? Is it secure? Who's saying it isn't? And one of the interesting things about the industry is you've got a whole wall of ICO people that went, oh, this might not be working so well, so let's just do an STO.
Yeah, that's what we're
trying to bring the same metrics in. Like 50% of tokens kept to the founders. And you're like, so you're starting with 50% of the money, so how are you going to get a return? So there's this whole rapid evolution of it. But it's just a few ideas to share.
No, but how do you maintain that responsibility? Because now this hype is once again crowding into the space. Now, STOs is interesting because if it's going to be backed by regulators and or it's going to be enforced by adults, does that actually strengthen an STO idea? But right now, it's just conjecture.
Yeah, look, so a lot of the first STOs coming up are like startups and new funds, so they're going to put it in a token, but then I don't know how you're going to trade it, or where you're going to trade it, or how you're going to value it. So the asset-backed equity ones are better for trading. There's valuations, and there's a more concrete valuation around it. So that's kind of how we kind of see it. That we've, as a regulated entity, we've just got to do everything by the book anyway. But we're assessing, I think, 12 different STOs right now, and we put up a few of the platforms, leading platforms in the US, who are all doing it their own way, as to kind of what Thomas said. So we're trying to stay agnostic right now. I'm working with Chad and the rest of the team to say, how do we start launching all these different types of security tokens and make sure that the technical side of it is proper after the finance and the legal guys have okayed it.
So that's a good question for Chad. I mean, what are the unique cybersecurity challenges that exist for STOs?
Hello. Thank you. I'll just touch base again that an STO, I think, is a lot different than an ICO in that you don't necessarily have the coin, or you don't even need the coin, but you have the right to execute a function call in a contract. And the difference is you might have other coins. You might have a senior tranche. You might have a mezzanine coin or an equity coin inside a smart contract. So the actual smart contract offering is, think of it more like a legal contract, more so than our traditional ICO coin. So you're going to have a basket of obligations within a certain contract that might be transferable to something more like an ICO coin. So I think there's a very interesting software element there. But regarding the cybersecurity, most cybersecurity problems are human problems, ironically. So a lot of these, and this is what's very interesting, when I begin conversations and when I go out to meetings, I really like to speak with legal people because I see them as my counterpartner as a software engineer, as an engineer in this space, because we have to create what is typically an inefficient legal problem and make that more efficient. And I think that is the cybersecurity problem here, in that when you have a human aspect or the human element involved with a computer or a cybersecurity problem, you're looking at the very same sets of problems across the board that a legal or a regular organization would face from a human resources perspective. What is the access control? Who's allowed to make transactions? Who has the right to do certain things? All of these things are very legal in the way you approach them from a security perspective.
Can it be standardized?
I'm sorry, pardon me?
Can it be standardized from your point of view, or does every STO need to be customized in terms of cybersecurity and legal?
No, I think that there's not going to be a standard, and in fact, a lot of the language and a lot of the contracts that have been coming out over the years have been totally security in the way that you define them. The DAO, time locking in ICO, all of these things are legal security principles that are baked into software. Now, how we approach what we legally define as these smart contracts will change by jurisdiction, but I think that standardizing it is going to be probably a function of who's doing the most innovative stuff, and everybody else chasing that.
Okay, so the scary part is you've just basically told the audience that they're going to have to do DD on every STO for every project and hire their own legal team and cybersecurity chief to take a look at the legal smart contract that is behind the STO. That's a little intimidating.
Well, we have a couple of friends at Horangi that are actually looking at how do you take a smart contract and produce a human-readable translation to it. And I think a lot of this, certainly in what we're doing with that project, is we're trying to really correlate what is the legal and what is the language aspect. How do you translate that into a legal document? So again, there's a lot of overlap in the security side with the legal element.
So let's say that I am interested in STO. What should I think about? I want all the panelists, including you, Chad. You could kick things off. If I were to assess an STO, what is the DD that I need to ask? The top 5 questions that I should, as a standard, to protect myself and my interests, and to check out this and see if it's for real. What are the 5 questions that I should be asking?
I'm not sure if I can come up with 5 in any kind of valid order, but I'll certainly come up with a couple off the top of my head. Again, it's the people. You need to really look at who are the people involved with any project, and I think that is what Julian said. If he's looking at a project pre-token, if he doesn't like it, he's not going to suddenly start doing it post-token. It's always going to be the human and the quality of the project. But certainly with due diligence, I think you have to look at from a smart contract software perspective, you have to look at who are the people that are actually writing and producing these contracts, who are the legal and who are the business administrative people that are coordinating to produce a future return in some way. So I don't think it changes much, but I think there's definitely a strong software component in making sure that it's valid.
Okay, what would you say, advice on how to kick the tires on an STO?
I mean, honestly, if you look at VCs and stuff, they have teams of people just doing nothing but looking at deals and deals after deals. And I think, to be very honest, like even for tokenization at an early stage, it may not be for a retail investor to kind of invest. It could very well sort of be institutions from the start. Let's say, for example, you have a toll road in China that was looking to raise 100 million, and if in the past, you had to find other institutions that would take 100 million, there are probably like a couple of pension funds that will be able to swallow something that size. But I think what tokenization can potentially do is to break that up into, let's say, 10 different tokens, but each of 10 million, in which case you have 10 institutions that can come in and actually invest that. So Personally, I don't think that it's going to move like right away to retail, and there's just no way around it. You just have to do your own research, and there's no sort of like magic solution. Just that because these things are tokenized, that you can kind of like find some way to do like your research in a much easier manner. Like that's just not going to happen. But where I kind of see it like happening in the earlier stages is really in the institutional space for these sort of large scale investments where you can sort of break it into like smaller chunks where it's then more tradable, more liquid in the secondary market for institutional investors.
Thomas, from a kind of a regulatory point of view, institutional point of view, because you're our guy on this stage for that, do you think there should be standardization? Do you think that there should be just a series of things that should just be the basis for any STO?
I mean, you've got to break it apart, I think, into the asset classes. Meaning, are you looking at existing processes that are going to get disrupted? Meaning equities trading, which that's just a leap of faith into a different process of time, specifications, location, meaning who's regulating it, what exchange is it sitting on, what are the processes for, and really one of the keys that are going to grow out of this is basically the custodian collateral management systems on the back of it. How do you domicile the asset? Not just on a digital ledger, the actual, where do you store it? And then you got the non-liquid assets, which are like immovable objects, like buildings, that are going to get put into that space. I think if you look at disruption versus changes, I think is that are you disrupting an industry or are you changing an industry? Or are you creating a new industry? And I think those are the three tranches of what we're looking at in the digital space. If you're changing something, it's just a better system, right? And there's already companies that have taken blockchain just at the back end and going, it's just a better way to own my spreadsheets. Right? Let's just change. Disrupting is like what these guys are trying to do in real estate. People don't own real estate this way. They don't fractionalize ownership models. They don't register the ownership structures of real estate, or financialize real estate, or commoditize real estate as they're doing. Right? And then there's the new businesses. Well, I mean, ICOs are fundamentally new businesses. So that's what I think is what's so. What people are realizing, it really isn't. It's just a change in how we're going to raise capital going forward, and who can raise capital going forward. The regulators have always adopted the protect the mom and pop attitude, especially in Asia. And it's really an equity-based attitude of who are you protecting, right? The above the line, below the line, the high net worth and accredited investor guy above the line, basically out here in this part of the world is, hey, it's buyer beware, you should know better, you got enough money, and you should be astute enough to go into that space, versus below the line. I've been in the commodity industry a long time. I actually never, ever had anybody that I knew personally ever invest in my business. It was just ethics for me to not go below the line, like going, a friend of mine who was a policeman, I knew he wasn't making enough money to be, bombing around inside Comex Gold or trading oil, right? He should stay in the stock market where they're protected. I think you're going to have the same type of attitude in terms of the disruptive nature of what we're calling STOs. It's a restructuring of the ability to own, trade, financialize, and collateralize assets in the world today. There are standardized assets that could be done that way, and there's the non-standard. So we're bringing the non-standards in. I think that's the key.
So so basically you're flipping my question on its head, and I appreciate it, because the premise from which I asked it was from an STO point of view, but what you're actually saying is
STO is simply a vehicle for something that you should be paying attention to, which is what Chad's point was, which is what is the underlying asset and you believe in it? And that underlying asset, as you've described, is disruptive, new business, or new industry. So thank you. Julian, how about you? Let's talk about STO. There's a lot of stuff happening. So as Thomas reminded us, and Chad did, and Anhui, which is, let's just take a look at the people and the ideas. What are the opportunities that are coming out in the STO space? what, in your view, should investors be assessing?
Yeah, a few things. I mean, all those layers of what people should be doing, and should you hire this and hire that. People should be doing that with ICOs. So I think now we're talking about securities projects, STOs. We're talking about, I mean, even for us, we're building this platform. We're building in all these partners that are specialists in that. So eventually, you can trust that it's all working and it's all being done properly. I think. So what's really interesting is you can. Right now, we're building the industry at the same time. We have primary issuance, the first STOs coming out. We're also building these exchanges. Why launch an STO if you can't trade it? Why build an exchange if there's no security tokens to trade? So it's kind of super, super interesting. It's also somewhat complex at times because both these things are happening at the same time. I highlight that because we talk about what are the opportunities. A lot of the opportunities that we're seeing right now today are a lot of the first STOs coming out are really just opportunities to invest in startups, issuing a token versus a piece of paper. There's a lot more risk behind that now, or not if they're just saying we'll issue a token and maybe one day it'll trade, and if not, you just have a share in the company. So there are a few different flavors of that, but I think that's sort of where the interesting opportunities are right now today. One thing that has been incorrect, the guys that have launched STOs today, most of them have failed. Most of them failed because they tried to put it as stable cryptocurrency, and it's not stable cryptocurrency, it's a share in a company or it's a share in a building. So that was a big failure, apart from thinking rich crypto people weren't very smart and they buy anything. So the original birth of STOs was a failure, I think, and now we're coming to sort of 2.0 already. And yeah, I think the interesting companies, the interesting STOs will be ones that potentially have a tradability, or there's a high chance of that. Everyone now saying, hey, invest in my STO, it'll trade on Open Finance or T0. These are platforms coming out in the US that aren't open today. So a lot of these are somewhat empty promises of tradability because it's not guaranteed because they're not even open. So whether they've got a contract or not, well, a lot of things are going to change, especially when 10,000 STOs turn up at the gates of these STO exchanges and say, we all want to get in. Obviously, it's going to be quality over quantity. Yeah, look, so we're taking a very kind of exploratory approach as a platform. We will be launching soon some projects. They will, some of them will be the startups. So we're going to make the calls on what we think are legitimate teams, big business opportunities, and also where if it's an equity in a startup and if the token never launches or it still just stays, it's still a good investment, and that won't be a bad thing either.
Which jurisdictions, I mean, we're in Singapore, very interesting space. I'm going to find myself here more frequently, that's for sure. But Hong Kong, Singapore, neck and neck, the competition is fierce. Which jurisdiction do you think is going to be the first to legalize the issuance and trading of STOs, and how critical do you think that's going to be for the adoption of STO? And I'm going to start with Anupam.
Singapore.
I want to say that, but I kind of feel that the MAS takes their lead from the SEC. I would say that I think in terms of the amount of thought that's kind of gone into these sort of things, the US is really leading it. If you look at the different types of regulations they have in the US, they have like Reg A, Reg B, Reg CF, and things like crowdfunding have actually been around in the US for a significant amount of time, relatively longer. And so I guess, in terms of like the depth to which regulators have really thought about it, I would say it's definitely that the US is leading it. But, whether or not they're going to allow these things to trade on, exchanges that have to have the right licensing, I think that's kind of like, it's kind of gray right now. The other one that we kind of see that's making a lot of news is Malta. And so Malta, being a small country in the EU, they kind of jumped on this opportunity very quickly. But one of the problems that I kind of see with Malta is that, ultimately they're still in the EU, and they're really under quite a bit of heat in terms of, anti-money laundering and some of these things, given that they're positioning themselves as, a blockchain center. And one of the potential issues is that when you actually hold on to customers' like monies and assets,
you actually need a certain license from the EU, which at this point, it's not very clear if the EU is just going to be like, oh yeah, Malta, go be your like blockchain center of Europe. I don't think it's going to be that easy, even though they really want to do it. And of course, being a small country, they don't have that much sway over the EU. So I would say it's kind of like an open race for now, but I think a lot of the thought leadership that's coming out in this area is really like sort of the US, and of course in Singapore, the MAS has been very forward thinking. If you look at the RMO, which is basically kind of changing the exchange model, that has very clearly stated that the reason for why they're actually looking to revamp the RMO is because of blockchain technology and new technologies like blockchain which enable people to exchange things. So I would say it's kind of like an open race until like it actually happens. Yeah.
I'll add to that. I guess for the past 10 years, I've spent the better part of the time in Seoul in South Korea. And the Seoul government, or the Korean government, has gone through several waves of harsh, regulation, criminalization, banning it at some point. And the people in Seoul, the developers, the communities, the projects have just kept going along. And you wouldn't even notice anything is wrong. And the government has always scrambled and tried to define or tried to get out of some very awkward or just an unpopular type of position on it. So if we look at more stronger types of stern regulation in China, we see now all of the Chinese projects coming to South Korea or Japan or coming to other jurisdictions that are welcoming. So I think the technology is always going to strive forward and solve these problems in a very unique and creative way. And I think it's up to especially the regulators in Korea and certainly in Hong Kong and Singapore to do exactly what MAS is doing, and that is to have the sandbox, to have an open dialogue, to discuss what is sane and rational, and clearly communicate to the entrepreneurs what is fair. And if there are dangers, certainly with AML or other types of issues that come up, we can have a discussion and we can solve them. So I think Singapore is doing a very good job.
To your point, September 2017 is actually when South Korea banned all forms of blockchain funding, regardless of technical terminology. ICO, STO, whatever you want to call it, banned. But you bring up an interesting point. How far can they keep the tide that is coming for them? The problem is when you have the institutional and the traditional and entire industries, as Thomas said, where the fear of change is more than embracing the efficiency of the future. That is at the core of the tension that exists today. So, where are the little pockets of breathing room? We're kind of finding it in Singapore, but the banking situation for any blockchain projects or crypto doesn't reflect that same attitude. So the left hand wants what the right hand doesn't want to give it. How does that resolve itself? This is a highly hypothetical, existential question in blockchain crypto industry. But how do our panelists want to answer that question?
I think if you go to, let's just take the banks, the reticence of the banks to basically clear crypto or crypto-related entities really had nothing to do with crypto. It had to do with the U.S. government, the U.S. dollar settlement processes, and FATCA and now OECD reporting cross-border, and the inability to really tax. That's really what it came down to. I mean, and so the language that was thrown out there was AML, KYC, terrorist financing. Very little of that has been proven. Even Japan was the first one to actually publish an audit back in July. They had done a year-long study to try to track AML, KYC. Obviously, it was mandatory there for the license exchanges. They're looking at terrorist funding and money laundering, and they actually published, and they had found 668 cases of related reporting of suspicious transactions in the blockchain space. And so they made big noise in that 668. So one of the reporters, it's a true story, one of the reporters said, okay, so in the traditional banking space, how many suspicious transaction reporting reports were filed? And they said 17 million. End of conversation. And if you notice, that language is actually toned down. You don't hear so much about terrorist financing anymore. The reality is some banks are breaking ranks. So Barclays in London 6 months ago were shutting people's accounts down. Are now realizing they need new clients. And here's a whole. No, I'm serious. It's DBS has reversed some policy here in the last 90 days too, because they understand it better. It's not the fear mongering of everything. In the Asian economy, so talking about who do I think is going to win this battle, I'll be honest with you, I think it's Singapore. Simply because they may be slow on some of their nature, what they're going to do and what their adoption is going to be, but I think they've taken the most pragmatic approach. Japan was very quick. They licensed the first 16 exchanges and everything, and they've had some growing pains as a result, and now they've got 160 exchange applications in front of them because everybody thinks that's the place to be, but volumes have turned back, and you've had some breaches there and things like that. So, and Malta is making a lot of noise, and because they need to. True story, I was in Malta. I was invited to Malta 2 years ago, and the Malta Stock Exchange was for sale. It's owned by the government. So they're looking for any new businesses they can, and crypto is. Anyway, it is what it is, and it doesn't take anything away from Malta. It's a wonderful place to visit, and it is a trading point in the mid-Mediterranean. But I think from a regulatory standpoint, the adoption standpoint, and also the open business models will allow Singapore to emerge out the top. I think organically, the U.S. will always be a leader. It doesn't. Coming from the U.S. side, laws here are very broad still, and so British laws are not clearly as well defined as U.S. laws are when it comes to financial industry. The U.S. has sliced and diced. So you referred to Reg A, Reg B, C, D. Like D16 is another one. I mean, how do you get to 16? You have to start at 1. What's the other 15? And they actually are 15 others, so you get the Reg D16, which is relevant to what we're doing here today for securities token registration. That's the legacy of the U.S. financial industry. And it's good there. Here it's very different. It's slower, it's broader, it looks very easy to come into, but actually that broadness can be deceptive, and it gives MAS a chance to change direction in the middle of the road. When you're already heading down a direction, they can potentially change it. Where in the U.S., if you get between those seams, and if you get on Reg D16 and you're right on point, nothing can be changed. So it's a different metric. But the cross-border trading and the trading community, the investment community, the relationships between MAS and the CFTC and the SEC are very, very strong. And MAS and the CFTC just signed an MOU fintech agreement 2 weeks ago. So they're already aligning themselves to have the growth actually be equal. I don't think it'll be separate.
It's interesting that I didn't know ICO was a band in Korea because that's the hottest market. So that was interesting. I guess my thoughts on that is I think we'll still see some layers, and I think that just because you can issue security tokens in Malta because it's legal and technical, how many issuers of high quality real estate in Singapore or Australia are going to want to launch over there? So I think the whole difference with the whole STO thing is there's an issuer, there's someone who owns that company or project. They don't want to go, if they can do it here, they don't want to go there. There's reputational risks. There's a whole bunch of where's the liquidity. I know of an island in the Philippines apparently is issuing security token issuances, exchange licenses, but I don't know. There's nothing there. So it's tropical island. So I think that we'll see different layers, and then we'll see the Malta's great. I don't know what type of security tokens will trade there. I'm sure there'll be a lot, and it'll just. But I also someone else said, so do you think? We were at the SGX, yeah, they said almost at this highest level, that's consolidation. So these big national exchanges aren't really working that well. Often it's for sale. So it probably ends up looking something like that in the security token space as well. These big players in these big markets, and then small things around, which is very different types of projects.
Well, I think I'm going to leave it to the smart people in the room. I'm looking at all of you. This panel is for you. It's been created so that you can tap some thoughtful participants in this space. I'm going to open it up to the audience. And don't forget, there's t-shirts involved. I see a hand, and if somebody can pass along a microphone. Thank you, Alice.
Thank you for the panel. I'm one of those fly on the wall types. So I'll ask a very basic question. We have these crowdfunding platforms which are funding these projects, and again, the problem was that nobody was there to do the diligence on these projects, and people would put it on a cloud platform and people would invest, and they could even trade possibly on those platforms. A number of those failed in China, and I think one of you mentioned about this toll road example, right? Somebody wants to raise $100 million. It's a toll road project. They could have a bank do an lending for $100 million. You can now, possibly fractionalize it into $10 million, or maybe even, $1 million, $100 million.
We can't hear you. I'm sorry. Hold on to that thought.
So, what is the, versus traditional financing, what is the benefit of doing an STO, right? That is something which I'm still not clear. Like, what part of the entire value chain of issuing a security, trading a security, what does blockchain or the underlying technology, right? Where does it really help?
So it's a different way of raising money. It's a different structure. You're still raising money. The tradability element of it is very, very important because it's a lot more attractive to invest in something that you're not stuck into for a very, very long period of time. So you'll see this as now, again, this is a form of shareholding, but it's also programmable, which is going to come up and see a lot of different interesting ways. So yeah, it's a different way of raising funds. It should evolve where it's open to a much broader audience. And again, because it's security, it's still related to these rules. I don't know what platforms you were talking about that were listing things that were illegal or something, but equity crowd security token platforms have all had to have licenses, and there's very strict rules around that.
Back there.
Hi, I'm Size M. Thank you. Question. I think I'm of the understanding that STOs, if you were to participate in it, especially a private sale, is there a lockup? Is it like a legal thing to have a lockup for a year? Is that a myth, or is that a legal thing?
It's actually a US regulation, so it's called a SAF, which is a simple agreement for future tokens. And there has to be like a, if you sell under a SAF, then there is a 12-month lockup, but that's unique to the US. It's really to kind of, not have to comply with some of the more onerous requirements.
It's not a requirement for non-US projects.
I was going to clarify, is it because that regulation exists to prevent the kind of activity we saw in ICOs, pump and dumps?
It was actually something that was popularized by Y Combinator. It used to be called SAFE, so it's a simple agreement for future equity. And so it's been in existence for a while. It's just that like people kind of use the same idea except for tokens. So it wasn't really to prevent like pump and dumps.
Okay, I've got the mic, so.
Oh, okay.
So, quick question. I think we all agree that it's going to move from ICOs to STOs. But one thing I don't hear much talk about is actually with equity-backed assets, you actually have some responsibility as well about potential debt if the business makes a loss. But nobody talks about that component in the crypto world. And I just wonder what the panel's thoughts were on that.
So just a quick one, like why not debt? If you look at, let's say, loans in general in the US, there are all sorts of different kinds of loans. And, just a good example is look at Apple, right? There's only one type of Apple stock. But, okay, maybe not Apple, but let's say General Motors like GM or GE. You're going to have one type of stock, but you're going to have probably 300 different types of bonds that you've issued over the entire course of, the company being in existence. With different requirements, like some are going to pay a 5% coupon, some are more senior, some are not, etc. And this is one of the underlying difficulties. And one of the things about bonds, that if you're an investment grade company, that's kind of fine. You don't have that much credit risk. But the difference between a bond investor and an equity investor, here's the thing, right? Equity investor wants returns, so they're kind of fine, except that you have to take a lot of risk, and potentially if you don't get your capital back, that's kind of accepted. But for a bond investor, you want your money back. And here comes in a very important concept of collateral, which means that if you're a sub-investment grade and you want to borrow money, then I'm going to have to take collateral. And what a lot of asset managers and what they kind of do on a daily basis is just when you transfer these sort of loan agreements or these sort of high yield debt agreements, you're basically checking to say, okay, this is collateralized by how much, and you're actually checking to say, do they actually own this collateral? And you actually have to check all of these things, and that's kind of the main reason why in general sort of that is more complicated, and it's a bit harder to kind of make it like uniform as compared to equity. Yeah.
The gentleman's first question about why would somebody want to choose in an STO versus a regular stock offering or an IPO? What is the benefit? Imagine the collateralization of these tokens or of these STOs become advanced and complicated in the sense that you can have automatic exits or automatic distributions across the whole galaxy of a variety of different asset classes. So you can really start building some amazing things within this space, whereas typically you would have to, if you wanted to, for example, execute on a convertible bond, it would be a tedious process with a substantial legal apparatus.
Yeah, thank you for the panelists' opinions on all this. Can you hear me? Yeah. So I have a question is regarding security. So primarily, if you talk about Ethereum, it is a very weak platform, full of loopholes, and is very dangerous. Yes, I say this because I'm a threat security intelligence person, okay? Not that I'm intelligent, talking about threats intelligence. So the point is, the fundamental of Ethereum is broken. And the language solidity is in fact broken. I can prove to you, technically, not here, of course. So the point is, I have a question about the legal standing. Why isn't there some legal standing on strict code auditing? I mean, there are people who will pay somebody who will do this, but most people don't do until it's broken. And also, a question on exchange. Trust me, it's insider job. Because in an exchange, you know a lot everything. And it's so easy to do this. And in the security space, insider threat is very common. It's about at least 80% of other things outside the blockchain space that encounter these things. So I'd like to hear your view, especially from the legal aspect. Thank you. I know Chad is a respectable Horangi person and also have a branch on blockchain or auditing and all that. Thank you.
That's very kind of you. Thank you. Yeah, sure. So obviously we would like to see an improved manner within the entrepreneurial community of making sure that when they write code, they write good contracts. I agree with you. There's Solidity is a lot like JavaScript, and there's so many different ways that you can write the same thing that there winds up being a variance in how to standardize a secure contract. So that is going to evolve. There's protocols that are coming out with better technology. Zilliqa is a fantastic example of that. Absolutely. So obviously, and this goes back to the due diligence question, if you're looking at a project, have they had an outside company look at some of the procedures they're putting in place? Have they had their code audited? Do they have cybersecurity in place? You can get a sense of the quality of the project certainly by looking at some of the different business decisions that are made regarding security. Thank you for that question.
So, we talked about security token being the next big market, and that's why we think that the security token will be the next big thing. So, my question is more around there's been hundreds of thousands of tokens issued already at utility. What do you think will happen to that market, those markets, in terms of their value and whether they'll go from utilities to security? There's going to be a big impact on the current utility market, utility token market. So what does the panel think about all the investors that have bought into the current ICO utility tokens? What will happen to them?
So I'll just quickly add something. The security token in many ways is going to save the utility token because you can bundle ETFs, you can basket them, you can structure them in a variety of amazing ways, and you're going to be able to have various different series of credit rating and collateralization built on top of this whole first wave of tokens. So it's going to be very interesting.
I agree with you 100%. You're going to have, some people have called it a bundling process, or basketizing. I'm no genius, but I saw this evolution a couple of years ago just because I thought that it's like a waterfall effect. It's a maturing of a market. And actually somebody's now written a paper on it. The guys at AirSwap in New York wrote a paper on the two-token waterfall, which is this evolution to taking the ICO. If it's a bad company, it's not going to survive. It's just like a bad stock that was issued. There are zombie stocks on every exchange in the world. Companies get delisted all the time. It's going to be an ICO that's going to die a slow death. But there are good representations out there, and I think the evolution is creating the ETF, which has not been regulated yet, but the bundling of other corporations that will become representative of different industries. If you look at your telephone, there are 65 different metals, just metals, inside your telephone. Some of them are micro, but you can actually bundle that into a product that's saleable, representing the digitization, the smartphone, metal bundle. You can do the same thing with ICOs, and it's an evolutionary process, I believe.
I think, yeah, I think we're all here to save the day now, so that's all good. No, but I think what's interesting was the ICO. Most of the initial ICOs, from my perspective, was you weren't investing into a company, and the company wasn't meant to make money. This was owning the system and giving the ownership back to the users, and then you had to have the users. So, I personally only invested into exchange tokens that were going to be used on the exchange because I just thought there's a business, they're going to make a use case, it's guaranteed. It's just a matter if it's going to work or not. And then, they've actually been a subset of the ICOs that are working because you weren't waiting 2 years to see if the protocol was going to open or not, and it was integrated. So that's where I think the connection to the STO and the ICO is we start to see if and you'll see these companies changing, the ones that survive. AirSwap was a decentralized exchange for trading ICOs. We're friendly with some of the founders, and I think they're trying to do real estate security tokens now. So So it's there's a lot of interesting stuff, and I think the good teams that even have the ICOs that have been pounded, they'll probably reinvent themselves, and maybe there's some hope or tie it into some STOs from someone who's actually done an ICO.
I think projects will just have to justify what the utility is, and also for users, does that utility actually matter to you? So let's say, I think for Ethereum, it's a very clear use case, like what you can use your Ether for. You can say, yeah, I can use my Ether for investing in ICOs, and that is real utility. And, you can say, oh, you can run some applications, which I guess some people do. But the reality is, I think a lot of the others will have to, work super hard, including ourselves, to justify the utility of the actual platform. And I think what you'll basically see is consolidation over the next few months.
James here. Basically, for ICO, what I see is that the market is very badly regulated, or there's no proper regulation that result in some of the ICO going into exchange without proper due diligence. Whereas for stock exchange, all the IPO are going through a proper due diligence before they are exchanged. So the question is for STO exchange, who are the regulators that manage or supervise seeing over the exchange to ensure that due diligence are carried out in a proper manner for STO to be launched? If that can be done, then the current stock exchange can also do STO.
Actually, anybody in the world can sell any product they want to. It's just what the structure and how you want to represent it. I mean, there is a world beyond listed stock exchanges that exists today, and if you look back historically, people called it the pink sheets market. NASDAQ has now adopted and actually created an exchange around it, but that's still the off-exchange trading of non-listed shares. If you look at the world of commodities, and we all live in a world of commodities, whether we want to acknowledge it or not, but most of the investment vehicles we know today are equities markets, especially in Asia. But we're the most commodity-dependent economies in the world. And everything you have on right now is a commodity. And probably most of it was produced in Asia somewhere, right? And there was a cost behind it, and there was a trade behind it, whether it's cotton or polyester. And if it's cotton, it's the agro industry. If it's polyester, it's the energy, it's the oil industry. And there's all related food chains around that, right? Virtually none of that is regulated in Asia. The largest significant financial trade in Asia does not sit on regulated exchanges. It's traded in the OTC world, the over-the-counter world, that does have risk mitigation only by choice. So when Pavilion Energy, that is now owned by Temasek, that's now trading LNG, whether they choose to hedge their trades or not, there's no mandate for it, right? So extrapolating, I'm not trying to get lost in the conversation, but to say that STO should be regulated actually is, most of the world is not regulated. We're familiar with the regulated world. We're familiar with equities because that's what we know. We're familiar with banks with what we know. But most of what you've got around here today, that the head of lettuce that you buy at cold storage or fair price, there's no regulation on how that lettuce is grown, sold, transported, or priced to you. You don't question that, do you? You don't question fair price. You don't question cold storage. We don't. It's just, it is what it is. You don't think that's a manipulatable market? I can tell you it is, because I know the guy who grows lettuce in Australia. Okay? He sells his head of lettuce to cold storage for 32 cents, delivered Singapore. Has anybody ever bought a head of lettuce in Singapore for 32 cents? And there's nobody saying that should be regulated. So I rest my argument.
The other simple response is there is no security token license at the moment. There's no security token exchange license. There's an existing exchange license regime all over the planet, except for maybe Malta and these new places coming out. So who's going to watch over the listing process and ensure the insider trading, which apparently is 80% of the world's business? same people who are doing it now. The security tokens are just a new product that need to go into an existing license regime. So
we have time for just a few more questions. Can I see a show of hands of people interested in asking questions? Okay, that's a lot of people. Okay, but why don't we just limit it to these 4 and that 5th question, and if we can get through this quickly, okay? So we've got 4 here. I've seen you. And then the gentleman who has the mic now.
Hi, I'm Kenneth. My question is more for Julian. You know, the basic fundamental of investing in real estate is leverage. It's so important because that's how you make the returns and the yields. So in terms of the STOs and this whole crypto blockchain space, I think, you know, the banks embrace STOs and they take that as a form of, they embrace it and they officially accept it. I think the STO and this whole market will really move because the basis of leverage on real estate is evident when you put cash down and you leverage up. But when you take an STO and you leverage property, the banks currently don't accept it, right? Because it's purely cash based on an STO. So what I wanted to ask you is, today if there was a building for sale and I wanted to use an STO or an investor crowd platform similar to that to buy it, will the bank still be able to finance the other portion of that? Or is it totally 100% equity?
yeah, so we'll never fund anything that where someone might say, hey, I'm going to raise money, let's go buy something. So without your question, we wouldn't do that anyway. So we would raise money for equity for someone that had locked up the debt already and could prove it. So I think, don't get too confused. The security token offering is a digital shareholding. What a bank would or wouldn't do won't matter if you're giving tokens or not. If you don't have the right LTV or you have the wrong investor, whether they have a token or a paper contract, it's not going to make any difference.
Thank you for the excellent presentation, and I was really intrigued by the slide earlier where there was zero STO or ICO, STO now and then 20 trillion, I believe, by 2020, which seems optimistic, but if you've been in the space long enough, you'll realize how quickly and powerfully this grows. In order to get there, this has to be scalable and therefore fungible, or I believe the other word was standardized that we used earlier. And therefore, that surely requires one universal blockchain to be used so that, a token on ICTX can be withdrawn to a wallet and then pop up somewhere else. Which is the lucky winner blockchain?
She's right here. She's right here.
Yeah, I mean, we're working really hard at Zilliqa on this area, so no, I really think that right now it's undeniably that the smart contract platform today is Ethereum, and there are a lot of attempts right now. So I think specifically for STOs, they're a bit of a different ballgame, and I like to use this analogy. So let's say, for example, if today you lost your security token, so technically, are you still like an equity holder or not? Because in crypto world, it's kind of like, well, that's your problem, you lost it. But it's kind of different if you're looking at sort of more the security token model. So I think these are some of the issues that you kind of have to think of, and I think it's still a race on as to see who can actually upseed Ethereum as right now sort of the smart contract platform of choice.
I think just on a comment on that too, I think the evolution, it won't be a single blockchain. I think you're going to have an evolution of portability and interoperability across exchanges, which you're already seeing in the early stages on the pure crypto side. If you historically look at existing exchanges, it could take years and decades for two exchanges to agree to swap even positions. So even SGX and the CME decades ago decided that you could clear a choice. You could be long something in Singapore and short something in Chicago. It took them a decade to agree that which side of that trade we can be liquidity swap. You've had exchanges that have launched in Japan and within weeks had signed agreements with the U.S. exchanges to be able to swap portability of products. The standard was the product, the underlying, whether it was a Bitcoin or an ERC20 token. But the agreements only took weeks, things that take decades in traditional architecture. So I think there won't be any single one chain, it'll just be interoperability.
Well, I would like to pose a question to Chad Lynch. You mentioned that the STO don't even have to issue a token. Is that the case? Is the smart contracts serve as the certificate of the entitlement of the equities, you see? And is that the case that can the STO be decentralized?
Well, sure. I mean, the issue is the fungibility of the value on the memory state, right? So if you have one address that has an integer value, I mean, that is within a contract. So technically, there is no such thing as a coin or a token. There is the right for somebody to have a certain integer within the state of memory in the EVM, right? So when you think of it as what is the right for somebody to execute a certain function call within that contract, you can think of it as the fungibility of what does that represent. And in some cases, it's going to represent perhaps equity in a startup. It's going to represent, or it's going to have metadata that represents the legal component in the real world. So that function call could represent something in real estate, a debt structure. So there's going to be an interesting collaboration between the O2O aspect of the security token. So it's hard to define exactly what the token will look like in the security contract, because it could be the right to a certain ownership of senior debt in a development project. So that's a very good question, and unfortunately I don't have the specific answer, but it's going to be an interesting couple of years developing that. Yeah. Sure. So decentralized would ultimately mean that. Right. So the Ethereum standard that's being developed now, the Ethereum integration protocol 1400 allocates an operator function call. So there's a certain operator that has oversight, and a part of that is the legal requirement to scale back a certain execution if it happened fraudulently, or in the case that somebody loses their token. There has to be some allowance for a certain operator functionality. So that's being baked into the new proposals coming out on the Ethereum standard. But I'm sure that there's going to be a wide range of functionalities possible in terms of decentralization or anything you can imagine, really.
Thanks for the great discussion. I would like to ask regarding liquidity. Liquidity is one of the biggest promise on the security tokens that will be bringing liquidity to different kinds of assets. They are illiquid or not so liquid right now, but it's also very uncertain right now because it's not. We don't have exchanges trading security tokens, so we don't know if they will be truly liquid and how will that be. I would like to hear your thoughts on how will that unfold.
It really, you have to define it by the asset. I mean, sort of the generic word, we're banding about this asset-backed token, you know. If we're talking about this building, how often do you think it's called velocity, right? How many times do you think this building's going to turn over? Once every 3 years, maybe? Unless it's a really hot building, and as opposed to a barrel of oil or an ounce of gold. I mean, the Digix guys are sitting back there. These guys are gold-backed. There's velocity in that underlying commodity. So you've got to define the asset, right? And every asset has a velocity, and you can look at the mathematics. I mean, you're a math head. I'm sure you've looked at velocity on different things, right? And you can understand that. Beyond that, I come from a world where there's professionals that create liquidity. In the old days, it was called wash trading, and it was highly illegal. there's now multi-billion-dollar companies that are now professionally creating liquidity because it's become regulated, right? Guys like Citadel and Virtu and a few others, they're professionals at it. Most of the stock markets in the world would not operate efficiently if you didn't have professional liquidity providers. You're seeing that in the crypto space. And it's really an extension of the liquidity industry that we already know. So there's a company here in Singapore, Cumberland, which is an extension of a company called BRW out of Chicago, large liquidity provider that now are providing liquidity professionally in a regulated environment, in a clean banking environment here in Singapore, very quietly. And they're the first of many, I believe, that are going to come. And then becomes the metric of what's the asset. Do you have an asset that can have velocity or an asset that cannot? And somewhere in the middle. Someone's always going to make a market, I think, going forward. And it's not so much decentralized in that, but it's hybrid models of access to certain assets have always been fairly closed. And who gets to see them? There's rights or privilege in certain classes of investment vehicles. That's going to be, that's part of the democratization, I think, of the asset classes. People are going to get to look at assets that they would have never been able to see before, simply because of the digitization of the assets. So I think the liquidity is going to change.
Hi. Just a lawyer's observation. If I were to do, say, a property-backed equity or debt instrument today and list that with the SGX, I'd have to really go through the hoops. They look through my prospectus, they check I actually own the asset, etc., etc. Now, what protection would there be if I were to do an STO with the same product? I mean, how is that going to work? I think absent regulation, are STOs really going to work? And if you do bring in regulation, isn't that sort of the antithesis of decentralization as well? So just welcome thoughts on that.
Cambridge has got a great report on decentralization. There's different layers and how they interact, and it's great to read that. That'll open up that question can't be answered very simply. It depends on the actual system. I think related to the process of listings, all exchanges, security token exchanges, well, at least here in Singapore, need local broker dealers like InvestaCrowd that scrape through the deals to make sure they're legitimate. So there's systems in place. The security token, again, is just a product that's going to go into a system and a regulated system that exists, and the same players are going to have to do the same things. There's just a new layer of a shareholding, which is a technology layer. It's got some depth to it, but there will be existing companies that are responsible for doing what you said is needed to be required.
So I want to thank our host, District 16, but really want to thank the event organizer tonight, Julian Kwan. And I want you to give it up for Chad of Horangi, Anhui of Zilliqa, Thomas, ICTX Security Token Exchange and PACE, and Julian Kwan of ICTX, InvestaCrowd, and you can find them all there. I'm at narramer.com. Oh, that's my other hat. You can find out about that there. And Forkast News is coming out to a platform near you. Thank you, everybody, for participating tonight. I know there's a ton more questions, so have at it. Rush these guys, because this is what this event is all about, is to network, learn, and participate in this industry we all believe that will change the world. Thank you very much.
Thank you, Angie. Everyone, if you want to finish up the food over here, there's some wines there. I think some people are going to head upstairs for some drinks. But thank you all for coming, and thanks again, Angie, and the rest of the speakers.
Yeah, it's great. Yeah.